Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Oh, I'm doing well, Will. Welcome to April.
Yeah, welcome to April. We got through April Fool's Day. Hopefully, no one got pranked too hard, and hopefully, everyone's going to do all right over the next 12, 24 hours or so. At least out here in Ohio, we're expecting some tornado watches and some adverse weather.
Yeah, we got all that last night. Luckily, I don't. There was some damage, quite a little bit of wind damage across Missouri, but I think for the most part, we got the needed
Yeah.
moisture we needed. We need
Well,
some more moisture. Speaking of moisture, we need moisture north of Missouri and Iowa. I mean, we need moisture in Missouri, but Iowa didn't get much of anything, and they could really use some rain. Iowa, southern Minnesota.
Well, it seems like we'd gotten plenty overnight around the Columbus area. Driving in, there's a couple road closures just because there's water, I guess, washing through. So, had to take an alternate route in this morning. But just got to give a quick rundown on the prices here to get us started out. For the nearby corn contract, we're down 1 cent at 4.35. December corn is up 1 cent at 4.74. Soybeans for May are down 16 cents at 11.85. November beans down 10 cents at 11.82. Soybean oil on a cents per pound basis for May is currently down 0.47 cents at 48.24. Soybean meal by the short ton is down $6 at $333.40. The nearby wheat contract is up 6 cents at 5.57. And then the June crude oil is up $1.65 a barrel at 83.18. So, Ben, some very, very light spread adjustments for corn and then some light losses in some other areas. But really, the market hasn't really moved all that much coming out of the holiday weekend.
Or, well, at least in the grain complex, the cattle market's getting hammered the last 2 days. But at least in our markets, relatively modest moves. A little bit surprising there. If you were to ask me where I thought corn would finish up on a week to week basis, I don't think I would have thought that it was basically flat, given that we saw the large reduction in planted acreage intentions relative to expectations last week. So just kind of interesting. The market has taken that in stride. Basically, we gained back everything we lost early in the week last week.
Well, Ben, just leading into that, talking about that planting expectation from USDA's intention report, they're looking at just over 90 million acres of corn, which is down nearly 2 million acres from last year. That's a pretty substantial drop, but like you said, it didn't really pull up the market maybe how you thought it might. So looking how that impacts things and how that impacts the planting season this year, what are your expectations for corn as we move forward with that lower acreage number?
Yeah, sure. So it is a 4.5 million acre drop year over year from 2023. We saw that surprise 4 million acre shift last year between the March and June reports. Could we see that again this year? Absolutely, it could happen. But do I think it's going to happen? Probably not. Right? We might see some modest adjustments, and by the time June gets, I think a lot of people anticipate a little bit more corn acres. This rain that we're seeing right now has certainly helped put some tamper on those expectations because it's kind of slowing down the planting a little bit across the region. The big story here is one was corn and the lower corn acreage coming in below the average trade estimate by almost 1.8 million acres. That was also very close to the lowest of the pre-report expectations. But I would also say here that we didn't get the rally, or we didn't get the rise in soybean acres that many people thought would come, including us, with a reduction in corn acres. And as a result, that principal crop acreage number is getting a lot of attention. That 6.3 million acre reduction in total principal crop acres. I'll remind our listeners and those out there a couple of things. This is not all solar panel and urban sprawl. That doesn't pop up in a year over year span. However, what this probably is it's some marginal acres that are irregular field sizes, maybe surrounded by trees that aren't going to get planted. It's also some CRP acreage increase. Those don't count in principal crop acres. And it's also a little bit probably of a reduction in double crop acres. We saw winter wheat acreage come down year over year. That's going to provide less double cropped acreage, albeit not huge amounts. In Missouri, that's only about 100,000 acres. But still, you start adding that up, and that amounts to several acres, the million acres that kind of fit into that picture as well.
Well, and just thinking about that 6.3 million number, I think that sometimes we think, oh, well, this is 6.3 million and these are the average yields. So this is how much is lost. And I don't think that's a good way to look at it and go about it, because a lot of times this is marginal ground. It's not, the most productive ground, because who would want to take that out of production? So really, as you see that 6.3 million number, I guess it's not maybe as frightening as it could be at face value, considering, likely the ground that's not being or the ground that is being counted within that 6.3 million number.
Yeah, so excitement is a relative term, right? Like what might be exciting to us isn't exciting to somebody else. And I would simply just say here that we needed this, right? The market needed a reduction in acres. We didn't need 93 million acres of corn. But if we took 2 million, 3 million acres out of the corn picture, we didn't need to put them into the soybean market. That was our problem, is like we had 6 million acres that we didn't necessarily need. I think I was using the phrase, we need 5 million. We need to, come up with something to do with 5 million acres. And we ended up with 6.3 million acres. And so I sit here and say, okay, farmers responded to low profitability and took some acres out of production. Now we have a chance, I think, at some profitability in these other markets or these other commodities, or all of our commodities. We have a chance at some profitability. However, just doing some very simple balance sheet analysis, right? If I take USDA's new corn acreage number, and I throw in, the trend line yield, and I make some adjustments on the demand side, we're still getting to 2.2 billion bushels of new crop carryout. That gets us to a stocks to use ratio of 15.3%. That's very high, right? Like that's higher than what we need on the corn side by a lot. So it's still bearish. The same picture exists on the soybean side. We're still, taking the adjustments all into consideration. We're still looking at above a 9% stocks to use carryout ratio. Anything above a 7% stocks to use ratio is usually pretty bearish. So, I guess I would say, is the report provided us an opportunity, and it could have been a lot more bearish than it was.
Well, Ben, you've already kind of teased the current planting picture, but USDA also did release its first crop progress report, and looking at corn specifically, only 2% in the ground, which it is on par with last year. But some of this weather, this rainfall in the eastern corn belt could slow things down here, and then in some other parts of the country as well. So as we look forward through planting time, at what point are you starting to see that as maybe a factor within the market if things are starting to be delayed, or on the opposite side, if things are able to get into the ground relatively quickly?
I'm not worried at all. We'll see how the next couple of weeks progresses. U.S. producers have proven that they only need like one good week to really get the bulk of the corn crop planted. We've got a long ways to go, 2 months here. So USDA did put out their first crop report that showed corn. They did not report soybean plantings, but that initial wheat conditions ratings for the winter crop wheat came in at 348% or 348 on the index. I remind viewers that a perfect score is 500. That was our highest winter wheat conditions index rating since 2019. So the winter wheat crop is starting off to a very good start. USDA has basically told us that there's only a small amount of winter wheat that is in drought right now, like 14%. That's the best we've had in a long time. So the winter wheat crop has an opportunity here to really grow. I'm probably more worried about sorry, I didn't mean to cut you off, Will. I'm probably more worried about a late frost at this point hurting this wheat crop than I am weather and planting, rainfall slowing down planting. That would be my answer.
Well, it is one of those things where I've heard multiple times, like from people that are saying, "Oh, well, it looks like spring came early this year." And I'm just like, "Okay, whisper it. Don't say it too loudly,
Yeah.
But anyway, Ben, winding down this week, looking at some ethanol and grain crush, some numbers here. Ethanol production increased and grain crush looks relatively strong. So looking at the picture there, how does that fit into the market as we wrap up this week?
Well, low prices certainly help bring back some demand. We've seen that across most of the corn complex. Demand has started to come back, which is a very good sign. And I shouldn't even say started. Demand has returned, is coming back on these lower prices, and that certainly fits into the ethanol production numbers or corn used for ethanol. Grain crushed for ethanol through February, which is the first 6 months of the marketing year, now totals 2.7 million bushels. That's 166 million bushels higher than the same period a year ago. So corn crush for ethanol is a bright spot. It's an area that we might even see USDA eventually at some point, if these margins continue, need to think about increasing corn use for ethanol demand.
All right, Ben. Well, as we look forward to the rest of this week, what should farmers and ranchers be paying attention to?
Yeah, relatively quiet week. Wednesday we get the ethanol report. Thursday we do have ag export sales data, but we also get the final agricultural land value estimates from USDA. And then Friday the CFTC reports, and Monday ag export inspection. So a relatively quiet week from our side. Very little macro data coming out as well.
All right, Ben, it's always a pleasure having your knowledge on the program here. Viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.